Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello to all the viewers in the group. I'm Xu Renqing, your analyst for the Spring Festival. Today is the first day of the Lunar New Year, so first of all, I want to wish everyone a Happy New Year. May the year of the horse bring you great luck, instant wealth, swift success, and everything goes smoothly for you. And I also wish everyone peace and good health in the new year. I hope you all get to spend quality time with your families and enjoy every moment, whether it's playing, eating, or just having fun. May you be completely satisfied. So, after a year of hard work, take this time to really reward yourself. Now, even though it's the holiday, the US stock market is still open. Yesterday was President's Day, so the market was actually closed. So today is basically the first trading day after their 3-day holiday in Changchun. As for what important things might happen, I've put together a list of a few key points for everyone. But I have to say, honestly, in the past 48 hours, not much has really happened. So there's no need for everyone to be too nervous. Right now, the index futures are experiencing some slight downward fluctuations, but overall, things are still okay. However, something more important happened last week. On the 14th, there was the Munich Security Conference. On that day, all the officials made their own statements, and actually, some of those remarks are worth paying special attention to. Because actually, for example, including the German Chancellor Scholz, and also last time Rubio, the US Secretary of State Rubio, and the French President Macron, basically they all expressed a very important point, which is the old order has already collapsed. Now, with the collapse of this old order, what kind of impact will it actually bring? In fact, from a long-term perspective, it will bring about a huge change to all of the existing orders. So here, I'd like to reference a point from Ray Dalio's latest article published on the 15th, just as a reference for everyone. When the old order collapses, security, both in terms of projects and requirements, becomes even more important. In this kind of situation, it's basically like what we've seen since 1945, or you could even say since 1949. The entire international order established after that, or even if you extended further to 1991 when the Soviet Union collapsed and the Cold War ended, everything we see now, the current international order or international free trade, this kind of established state that we've been used to for a long time may gradually start to change. To put it simply, short supply chains might become a more important mainstream trend in the future, because if this established international order collapses, at the very least, the long-term reliance on long supply chains in the international supply chain system will inevitably undergo some changes. This will create a huge demand for short supply chains. Once short supply chains emerge and there is a large demand for them, then what kinds of industries and what kinds of needs will become more prominent? And become an important project, I think this is something everyone will need to think about in the long run. When it comes to short supply chains, which industries will actually benefit? This is something you might want to give special thought to. Personally, I believe that, based on what I've shared with you all over the past week, it's very possible that short supply chains will indeed become a very important project in the future. Alright, let me check if there were any comments yesterday. Okay, there are some comments, right? You all can hear me, right? Alright then, I'll go ahead and continue with the presentation. Alright, first of all, things are pretty interesting right now because there are actually 2 rounds of negotiations happening in Geneva. The first round is between Iran and the United States, and it was just announced that the talks have concluded, but there's no further information at the moment. As for whether the talks went well or not, right now there are only some, you could say, some rumors have come out, and of course I'll share those with everyone. So after these 2 finish their talks, what's next? The next round. It's Russia and Ukraine next. Reportedly, they're supposed to discuss territory, military, and political issues, the economy, and broader security matters. Right now, it looks like it's just the 2 of them talking, meaning no one else is involved in the negotiations. So basically, Geneva has now become a place where everyone takes turns negotiating. The second thing I think is pretty important is that the ECB last Friday through Saturday officially announced that it would provide euro liquidity to all banks worldwide. In a way, this is also to meet issuance and trading requirements, allowing euros to be used for energy transactions. Key sectors like aerospace, computing, and national defense might be allowed to settle transactions in euros, or at least be encouraged to do so. So basically, the ECB is making a move here. You could say they're taking a step forward in this regard. They're getting ready to challenge the dominance of the US dollar. Now that they're starting to provide euro liquidity, could this have a significant impact on the long-term development of the euro? I think this is something we need to keep watching going forward. Alright, so now we're actually going to talk a bit about geopolitics, because I think this has been the most important factor for the international markets while we were all on break for the Lunar New Year this week. I think this is something everyone should pay special attention to. And I'll also share with you some of the important issues and data related to this topic. As for today, the main focus is the New York Manufacturing Index, which is currently expected to be 6.2. But honestly, that's not too important, because what's more significant for New York is the Services Index. Then, later tonight, there will be Powell's speech, and at 3:30 in the morning, there will be a speech by Daly. First of all, the current situation in Iran is really very unclear, because right now, Iran is basically conducting military exercises, and according to the latest news, they have already launched missiles. And their main objective is actually to blockade. They are now working on blockading the Strait of Hormuz. They said it would be closed for several hours, and in fact, over the past few hours, it has been completely blockaded, with control taken over by the Islamic Revolutionary Guard Corps. The blockade has been quite thorough. Also, whether it's air, ground, or sea, there have been some pretty obvious offensive drills and actions taking place. So basically over here, they really have made a pretty strong response. As for their current nuclear negotiations, well, we can say the talks have already concluded. Last time, the talks lasted about 7 hours, and they said things went smoothly, but in reality, there wasn't any concrete agreement. At least though, a second round of negotiations was confirmed, and just now it was confirmed that those talks have also wrapped up. The latest update is that Iranian officials have stated they will discuss the issue of uranium enrichment. But at the same time, they also hope, well, if they do this, then will the US be able to ease some of its corresponding sanctions? Also, actually, their latest statement is something everyone should pay special attention to. Their latest idea is for Iran to pause uranium enrichment and move their stockpile offshore for US monitoring. They also want to reach commercial agreements with the US, which I'll explain in more detail in just a bit. And in exchange, they want the US not to attack them. But right now, whether Iran will actually say they'll completely stop all uranium enrichment activities, and whether that would really satisfy the US is still a big question mark. So yeah. So basically, this is the second round of negotiations. Iran is showing more goodwill this time, but whether they can actually meet the US's demands, that's still a question mark for now. We really can't give a clear or definite answer at this point. And the reason why the situation in the Hormuz Strait feels especially serious this time is because, let me show you all. You can take a look at the latest market data. Here it is. Oh, this isn't real time. This is updated every 15 minutes, so it's from about 10 or 20 minutes ago. This shows the overall situation of oil prices. As you can see, the reason why oil prices are still relatively high, higher than in the past few months, is really because the Hormuz Strait, with Iran's latest military exercises, has clearly demonstrated that it has both the right and the capability to block the Strait of Hormuz. There's something everyone might have overlooked. Who would be affected if the Strait of Hormuz were blocked? Dubai, the United Arab Emirates, Qatar, Bahrain, Kuwait, and Saudi Arabia. All their ports would be impacted. And if this area gets caught up in conflict, even Oman's revenues and interests would be completely entangled as well. But the worst case scenario, which I'm not saying will definitely happen, I'm just showing you how to reason out the most severe possible outcome, is that if war breaks out here, it could spread from the Persian Gulf to the Strait of Hormuz to the Gulf of Oman and even extend to the Arabian Sea. War could engulf this area. If so, cruise ships and tankers would be trapped. We'd rely solely on land routes using only pipelines. But near the Red Sea, Yemeni militants remain a threat. That basically means it would be really hard for your oil to reach the sea. You'd only be able to send it out through the pipeline that goes from Saudi Arabia through Jordan and Israel. No matter how you try to get it out, this would be a huge, potentially fatal blow to the oil supply. So why are oil prices currently high? I mean, nothing has actually happened yet. There's no fighting. Nothing's really started. So why are oil prices still staying at a relatively high level? The main reason is really this uncertainty. It's actually a big factor for all the oil producing countries in the Middle East. It can have a huge impact. So even before we talk about whether Iran itself will actually be attacked or not, just the threat alone is enough to affect oil production throughout the Middle East. That's why we need to keep watching to see how the conflict between the two sides will eventually be resolved. Whether the conflict escalates is also a key factor. But the recent military drills in the Strait of Hormuz show they can blockade that area. And then, as for Khamenei, his latest statement is basically about the United States sending warships to Iran. He said that, to some extent, this is a threat. Although warships and aircraft carriers are very dangerous, it doesn't mean we can't deal with them. In fact, we actually have ways to counter warships. What he's saying here is essentially a form of intimidation. He also said, well, this is indeed quite a frank admission, but he also said that they won't be able to do this in the future. Basically, he was just saying that Trump said they've never been able to destroy Islam, meaning Iran. No matter what the US has tried over the years, Iran has never fallen. So this is considered a recent, straightforward statement from Trump, a kind of candid admission. And what they mean is that they won't be able to do it in the future either. Even if Iran really suffers a major blow, they've already prepared to declare a state of emergency. Like we mentioned before in Monaco, after declaring a state of emergency, they basically delegate all authority to the local governments. So they've already prepared for the worst case scenario. If they really do suffer a major blow, the local governments will basically move forward under new leadership on their own. So Iran won't collapse. Even if he ends up dying, Iran still won't fall apart. So this is actually a pretty strong statement, but at the same time, they also made it clear that they don't really want to fight either. And also, just to point something out for everyone, why did they make such a clear statement? The reason is that most recently, on Friday and Saturday, 18 F-35s were sent to the Middle East. So basically, the US is already taking actions over there that are pretty much preparations for war. And then the latest news is that US media have reported that Trump told Netanyahu that if he wants to support Israel, he should back these airstrikes against Hamas. At the same time, they're also discussing that basically the US military is already providing support and is already talking about this possibility. So it's about how the US can coordinate and assist Israel, like providing aerial refueling and making sure that countries like Jordan and the United Arab Emirates might open up their airspace. Although as of now, all three of these countries have said no. They can't open it, but will they open it when the time comes? We don't know. Because during last year's attack, they all said they wouldn't open it, but in the end, they still did. So how things will actually play out, we're not really sure. But for now, it looks like the US military does have some related contingency plans, and they're currently discussing them. And at the same time, on February 15th, it was confirmed that the USS Lincoln was already in Oman. At that time, their carrier strike group had indeed entered the area, and the related flight operations had all been deployed as well. And as we just mentioned, the latest batch of 15 or 18 F-35s has also been dispatched. In addition, the USS Ford has basically been redeployed from the Caribbean to the Middle East. So, in effect, there are indeed two aircraft carrier strike groups heading toward Iran. So Iran's plan to blockade the strait in response to nuclear weapons is also meant to send a warning to the United States. If you dare to get involved, I'll dare to blockade the Strait of Hormuz. So in fact, this is a pretty strong act of deterrence and intimidation. And as I just mentioned, Iran has also proposed some new business plans. The rest is just about those things. It's oil and gas, for example. It's willing to jointly develop mines with the US, open up development to the US, and even open up the aviation sector to the US, including buying planes from America. So basically, Iran is willing to make comprehensive commercial concessions. In exchange, they want the US to stop targeting them like this. So from Iran's perspective, this level of openness is actually, I have to say, quite significant for them. It depends if the US accepts this. If not, Iran is stuck. If you want Iran to stop uranium enrichment, they see it as being denied nuclear power. They claim they want power plants, not weapons. But if you won't even let them have that, then what's left? So where exactly should I back down to? That's their official stance. As for what they actually do in practice, we're not sure. But at least in the media, that's the narrative they present. Now, whether they're willing to open up more commercially, whether that openness can be exchanged for greater compromise and concessions from the US, I think that's something we really need to pay close attention to going forward. Because if this kind of straightforward exchange of financial interests can actually secure a compromise from the US, then basically the Iran issue, the biggest conflict in terms of oil prices and geopolitics, can be considered resolved. That would basically mean there wouldn't be any major negative impact on the overall market. But if the US refuses even such a straightforward financial offer, could that lead to an even bigger shock? That's something we all need to keep a close eye on in the coming days. Alright, let's take a look at the euro situation. As we just mentioned, the ECB will basically spend more resources and go all out to support the euro, and this will actually have a long-term effect. So the euro is still consolidating at a relatively high level here, but overall, I think the euro's influence and reach will gradually expand. Actually, I think there's a chance that its overall role in the entire payment system will gradually rise. As for European stocks, just like after hitting new highs a few days ago, they're now also in a phase of consolidating at high levels. Germany is... wait, we'll check US Treasury soon. Market sentiment is risk-averse now. Germany didn't consolidate at highs as expected, but kept gapping down and dropping. So basically, even though Germany is clearly going to expand its bond issuance, and even though the ECB probably won't have much room left to cut rates, meaning Germany might issue even more bonds in the future, its bond yields are still gapping down. This shows that the market's risk-averse sentiment is actually rising. So this is something everyone really needs to pay close attention to, whether big investors might be worried about something. Geopolitical tensions might get even worse, so this is something everyone really needs to watch out for. It means that some big players are taking very strong defensive positions as a hedge against risk. Alright, and there are a few important things here. For example, at 3 a.m. on the 19th, at 3 a.m. the day after tomorrow, there will be the FOMC meeting minutes released, and then this week, on the 19th, there will be that as well. Also, on the night of the 19th, Bostic, Bowman, Kashkari, and Christopher Waller will be speaking. One is a hawk, one is a dove, and then there's Bowman. He is the chair of regulation. They're all considered pretty important officials. Then on the 20th, Logan will be speaking. Logan was a well-known hawk not long ago, and this year he has a vote as well, so we'll see what they have to say. Especially after last week, with the very strong non-farm payrolls and a CPI that was lower than expected, what kind of feedback might they give? And among these, there are a few important data points. First, on February 18th, there will be new orders. But what I think is especially worth paying attention to is the new orders for non-defense capital goods. That is, new orders for capital goods excluding defense and excluding transportation. The current market estimate is 0.4. As long as the numbers actually come out pretty good, that means the demand for overall capital goods and for the entire industrial sector is actually quite strong. So if these orders really do materialize, it would support our speculation from last week, whether industrial demand could be a very important theme this year. I think this is definitely a direction everyone should pay special attention to. Then on the 20th, we have PCE and personal income data. Currently, the market estimates personal income at 0.3%, personal spending at 0.4%, PCE year over year at 2.8%, and core PCE year over year at 2.9%. At most, it's below 3%, so the most important data this week is the PCE on the 20th. Then, at the same time in the evening, the S&P Composite PMI and Manufacturing PMI will also be released. I think the Manufacturing PMI is something everyone should pay special attention to this week, because the market is currently estimating it at 52.4. So whether it can continue to stay above 50 or even keep rising, and whether its sub-index data can further support what we're seeing, a clear trend of industrial demand continuing to rebound, are all things to watch for. All this serves as supporting evidence for the trend we've seen, whether it's real and its potential. These are important data points, but the market will likely react to the PCE data on the 20th. So this Friday, everyone should pay special attention. At that time, we'll also be about to open the market, since we'll be opening next Monday, so everyone can keep a close eye on it and see what kind of impact it might have. Then, this week, there are a few important earnings reports. For example, in the early morning of the 18th, there will be Polo Auto, which is also related to advertising, and it also has some investments related to AI. Another important one is Deere on the 19th, which is an agricultural machinery. We probably mentioned agricultural machinery last week. This is also a pretty important indicator to keep an eye on. Then on the 19th, there's Walmart. The main thing to watch here is the overall retail sales in the US, how the overall US consumer market is impacting the market, and how they view the future trends in US consumer spending. Then on the 20th, there's Monty, which is a very important indicator stock for gold and gold stocks. All right, let's take a look at which stocks are performing the strongest in pre-market trading right now. Right now, the strongest performer is Huanan Brothers, mainly because there was just news about Huanan Brothers. Apparently, they told Netflix and also told Huan Brothers, hey, you guys can go talk to them again, okay? And then, Huang Brothers, their name is possibly being considered for a restart. And right now, there are rumors that Paramount's offer might be raised to over $31. So that's why Huang Brothers stock is up quite a bit in pre-market trading. And currently in pre-market trading, the ones dropping the most seem to be the big companies. Oh, MasterStrategy is down again because Bitcoin is really weak. Bitcoin is honestly very weak right now. And Monty is also down because gold is relatively weak at the moment too. Next, let's compare everyone's recent performance in some of the application stocks. Alright, let me show you this as well. We've previously talked about the issue of funding costs. As of last Friday, the latest update, this purple line here represents March. March is showing a drop, and since it's already February 17th, we're getting close to settlement, so funds are starting to be gradually pulled out. What you need to pay attention to are June, September, and December. From the perspective of June, basically there hasn't been a significant surge, so that means there aren't more people taking out financing. And for September and even further out to December, those are basically trending downward as well. So at the moment, when it comes to institutional financing in the US stock market, there really aren't that many people actively using institutional financing for operations. Their attitude really isn't all that aggressive. As for the US dollar index, it's still basically fluctuating right now, still pretty volatile, but in the long run, I still think it'll trend downward with some volatility. In the short term, this looks more like a demand for risk-averse hedging. Then you can take a look at the 10-year here. Basically, this is really quite strong. Like this bar, this one here, this one is from Friday the 13th, and this one is from the day after the non-farm payroll report. Because there was a big gap up here, and then right after that, this bar was a breakout. They were factoring in the situation in Iran. And then this bar was due to the CPI. So basically the expectation for a rate cut increased, and as for non-farm payrolls, because of the overall geopolitical uncertainty and the rising demand for safe haven assets, US Treasuries did indeed rebound. The price of US Treasuries really did bounce back, so this move here is more about risk aversion. Now let's take a look at another one, the 2-year Treasury. You can see that the 2-year Treasury overall is still trending downward. So the 2-year here looks more like it's being driven by rising expectations for rate cuts, because the 2-year is closely linked to the Fed's federal funds rate. The correlation with the 2-year is stronger. The 2-year has a stronger relationship. So basically, the 10-year has an added element of strong demand for safe haven assets. Now let me take a look at US and Japanese government bonds. Japan, starting from 4 years ago. Hold on a second, just a moment. Japan. That is really interesting. Alright, let's take a closer look at this right now. So basically, Japanese government bonds also surged sharply today. This price, I'll just pick one at random. This is the price of one of them. Overall, Japanese government bonds have seen a significant rise, JP. Oh, this is just for your reference. Alright, then let's take another look at the current pre-market situation. Right now, before the market opens, the S&P 500 is also showing a bit of a mixed trend. My take on this is that it's very likely the market will continue to move sideways for a while because in the short term, all kinds of negative factors are still putting pressure on it. So unless the PCE data comes out really strong, it's actually pretty tough for the market to see a big rebound in the short term. And the Nasdaq is actually being affected even more. As for the Nasdaq, I basically think that if we're not careful, it could end up testing the 200-day moving average. If we're not careful, it might even drop down to test the November lows. I think that's definitely a possibility, so that's something everyone should pay special attention to. Then you might be wondering, what kind of impact could this have next week? I have to say, let's wait until Friday to talk about Friday. Right now, the way the US market is trading hasn't really had a clear impact on the Taiwan stock market yet, at least not obviously. But as for the US market itself, my view remains the same. Basically, tech stocks will still be relatively weak. Personally, I would still recommend that everyone keep an eye on the Dow Jones. I still think industrial stocks are relatively more worth investing in. I believe industrial stocks should be the main focus. Alright, let me check if anyone has any questions. Okay, looks like there aren't any questions. So, I wish everyone a happy new year. May you make a fortune in the year of the horse, achieve success right away, get rich quickly, and have prosperity come to you immediately. So, I wish everyone all the best. Stay safe. Oh, Happy Lunar New Year! That wraps up everything we discussed in today's group session. Thank you all for listening, and I wish you smooth trading. See you tomorrow. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.